Imagine you're in a dark room and the only way you can see is by lighting a candle. Each candle burns for a few minutes and showing you what's happening around you. Similarly, candlestick charts work the same way. It shows you what's happening between the buyers and sellers in a specific time frame. Welcome back to Stockshaala by Kotak Securities. I am Pranav VK, an NISM certified trader and trainer, and in this video we are going to learn how candlesticks are going to light up your market's journey. So what exactly is a candlestick? A candlestick represents price movements in a specific time frame and has majorly four parts: an opening price, a price at which it started; a closing price, a price at which it ended; a high price, the highest price it reached on that specific time frame; and low price, which is the lowest price it reached in that specific time frame. There are majorly two types of candlesticks: a bullish candlestick, which is represented in green color, and a bearish candlestick, which is represented in red color. Now we will understand the formation of a bullish candlestick. Let's head back to the whiteboard. As I mentioned earlier, there is an open price, there is a closing price, there is a high price, and there is a low price. Imagine the price was around 100 rupees when it opened in the morning, and as time passed by, sellers took control and the price came down to 95, and somewhere during the day the bulls took control of the market and pushed the prices as high as 115, and finally at the end of the day the price closed at 110 rupees. So as you can see here, the opening price was 100, the closing price was 110, which means the closing price was higher than the opening price. So which means it is a bullish candlestick, and the high price is at 115 and the low price is at 95. So this is how a bullish candlestick is formed. So corresponding to the opening, close, high and low prices, you can see the candlestick on the right hand side. The opening price is represented here, which is here. This is the closing price, and this is the high price, and this is the low price. The green part that you see is called as the body of the candle, and the wicks that you see on the top and bottom, those are called as the shadow of the candle. Now let's understand the formation of a bearish candlestick on the whiteboard. As you can see, I have mentioned the opening price, the high price, the low price and the closing price. And on the right hand side, you can also see the candlestick, which is represented in red. Now let's understand the formation during the day, how this panned out. Imagine the price of the opening price was 110 rupees. And during the day, the bulls pushed the prices as high as 115. And at some point of time, the sellers took control, they became aggressive and they pushed the prices to as low as just 95. And finally, towards the end of the trading day, it closed at somewhere at around 100 rupees. So in this thing, what you can observe is that the closing price is lower than the opening price. And in this scenario, it is represented by a red body and it is called as a bearish candlestick. And to repeat, the red part is called as the body of the candle, and the above and below parts that I am marking right now is called as the shadow of the candles. And this is how a bearish candlestick is formed. Let's do a small activity to put our learnings into practice. I want you to grab a pen and paper and also pause this video once I give you the complete instructions. And I want you to draw a candlestick. So here are the instructions. I'm going to tell you the values of your opening price, the closing price, the high price and the low price. And I want you to draw the candlestick pattern. Here are the numbers. The opening price is going to be 100 rupees. The closing price is going to be 125. The high price is going to be 150 and the low price is going to be 95. Now go ahead and pause the video and try to draw this candle on your sheet of paper. Now let's head to the whiteboard. This is the low price, which is 95, and the lower part of the body is the opening price, which is 100. The upper part of the body is the closing price, which is 125, and the highest part of the entire candle is the high price, that is 150. So if this is how your candle is looking like, then congratulations, you have learned how a bullish candlestick is formed. Let's talk about the two parts of the structure of a candlestick. One part is called as the body of the candle and the other part is called as the shadow or the wick of the candle. We'll start with the shadow of the candle. Let's head to the whiteboard to understand more about it. The shadow or the wick of the candle basically represents how high or how low a specific stock has moved in that specific time frame. Let's imagine this is a candlestick of a 1-day time frame, which means it is showing us the opening price of that day, it is showing us the high price that stock went on that specific day, the low price it went during that day, and also the closing price of that specific day. And in this, the shadow is represented by 95 rupees, which is the low price, and also 150 rupees, which is the high price. Irrespective of whether it is a bullish candlestick or a bearish candlestick, the high and low will always remain the same. But one thing you have to remember is that when you are making a bearish candlestick or when you are analyzing a bearish candlestick, the only thing that will interchange is always the opening price as well as the closing price. In a bullish candlestick, the opening price is at the bottom. In a bearish candlestick, the opening price is at the top. The reason being, in a bullish candlestick, the price is ending at a higher level than where it started. In a bearish candlestick, the price is closing lower than where it started. Now coming back to our shadows, the low and the high price will still remain the same for both a bullish candlestick as well as a bearish candlestick. Now let's head to the whiteboard to understand how shadows or wicks are formed and why do they even form in the first place. Now as you can see, the high price, which is 150, and the low price, which is 95, are representing the shadow of this specific candle. Let's understand why they are formed. During the opening price of the day, which is 100, the number of sellers actually became aggressive and pushed the price to as low as 95 at one point of the day. Let's say this happened at around 10 AM. And sometime during the day, there were not enough sellers who were aggressive enough, because of which the number of buyers increased, which means they became aggressive and pushed the price to as high as 150 rupees. But even then, at 150 rupees, the number of buyers were not aggressive enough, which means the number of sellers again became aggressive and pushed it back to 125. So that is the reason why we see a lower shadow as well as an upper shadow in this specific candlestick. Whether it is a green candle or a red candle, there is always formation of shadows and the values of high and low remain the same on a green candle as well as a red candle. The high always remains on the top and the low always remains at the bottom. Now that you have understood what are shadows, now let's understand how the bodies of the specific candlesticks are formed and how they are different in a bullish candlestick as well as a bearish candlestick. In this case, the opening price of a bullish candlestick was at the bottom of the candle, as you can observe, which is 100 rupees. But in a bearish candlestick, let's take certain values so that you can understand this example even more clearly. I will assume the opening price to be 125, the closing price to be 100, the high price to be 150 and the low price to be 95. And now the bearish candlestick is formed here. So let's put the values to make this even more clear. The high price was 150, the opening price was 125, the closing price was 100 and the low price was 95. The only and major difference that you see in the body of a bullish candlestick versus a bearish candlestick is the interchanging of the opening and close price. In the bullish candlestick, you see that the opening price is at the bottom, the closing price is at the top. Whereas in a bearish candlestick, the opening price is at the top and the closing price is at the bottom. The simple reason being, in a bullish candlestick, at the start of the day, the prices was at the bottom and went all the way up. But whereas in a bearish candlestick, the price opened at a higher level, but during the day it came down and ended at a lower price than where it started. And that is how the body of a bullish candlestick and a bearish candlestick is formed. Now let's understand a candlestick in a live chart. Here I am showing you the candlestick chart of Kotak Mahindra Bank on a one-day time frame. Let's choose the 24th of February as an example. Here let's identify, since it's a green candle, the opening price is at the bottom. The opening price is approximately around 1938 and the closing price is the top of the body, that is 1966, and finally the high of the candle is 1969, which means during that specific day on 24th, the value of Kotak Mahindra Bank went to as much as 1969, but finally came down to 1966 when it closed during the day. We can also observe there is a low, there is a shadow at the bottom, which means it also went to 1933 somewhere during the day. So this is how a green candle is visible on a candlestick chart. Let's also look at a red candlestick and understand the opening, low and high and close. So in red candle, as we know, the opening price is at the top of the body, which is 1972. The high price on that day was 1974. The closing price is 1947, and finally the low of the price was 1940. So which means the opening price was higher, the closing price was lower, which means this was a red candle and the price fell on that specific day, which is 27th of February. Now in the upcoming videos, we are going to see that there are different values and sizes of both the body and shadow of candles, which means there is more to understand about candlesticks, and that is nothing but the single candlestick patterns as well as the multiple candlestick patterns. But there are many types of these patterns. We are only going to pick and choose some of the most important ones so that you can make your analysis very effective. I am Pranav VK, an NISM certified trader and trainer, and you are watching Stockshaala by Kotak Securities, and I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.